Today's market is clearly dominated by banks and finance companies. The Bank Nifty itself is a minor outperformer, but more important, the weekend saw a bunch of big bank results, ICICI, Kotak, some mid-caps like RBL, Paytm, L&T Finance, Poonawalla Fincorp, and smaller ones like CreditAccess Grameen, many of them extraordinary numbers. I have with me someone who is a past master at watching stocks and bank and finance stocks, included Deepak Shenoy, CEO, Capitalmind. Deepak, good morning. Thank you very much for your time and good to see you in festive finery. Happy Navami to you and to everyone. Well, I wanted to start with Kotak, really. The markets, unexpectedly not sounded too enthused at this point in time, but that could be a fleeting reaction. It could also be previous positions. But what did you make of the fact that there is a CEO whom the RBI has readily approved and he comes with good credentials?
Thank you, Latha, firstly, and happy Navami to you and all the viewers. We own Kotak, so in a way we are very biased, but I think this removes the fear of what's going to happen, in terms of the uncertainty of, who's going to be the new CEO and all that. Of course, there's, I think, also the fact that you've got to have the new CEO coming in and making the changes or how the operating concepts will change. I don't think much will change at Kotak. It is a very institutionalized organization. I think they will power on, and we might not see issues like we've seen in other banks when CEOs change. When a new CEO comes in, they say, there's a bucket sink quarter, and the stuff that is stuffed into one quarter in the first quarter of a new CEO. I don't think we will see those issues with Kotak at all. Therefore, I think the continuity is a good thing. I won't, of course, comment on how the bank will perform. I don't know. We don't have much information on how this new CEO will change anything going forward. But I feel the uncertainty about the CEO has gone away, and the bank is a very solid bank. So I would say at this point, we own it. We believe that it's worth much more than it is right now. But the growth has to show the way. And I think in the next 2 years, that will happen.
The problem with Kotak is that it's always been overpriced to perfection. Will it have to wait before it shows the same kind of ROE growth that ICICI has managed? Almost 19-20% ROE growth. That's huge. So will that keep Kotak on a leash simply because it's priced beyond all this?
Well, that's true. It has been priced higher. It's also because I think the mix of its loans has always been towards a relatively higher growing segment, where in retail, where you've got now a lot more players coming in, including ICICI. We've had a lot more of the smaller banks also try to pry into that territory. But I think in general, and we'll see once results come out, that overall Kotak's growth will probably be at the same level or higher. Is what I've seen in the past as well, and I think even from a risk-adjusted perspective, they've performed really well in the past. I think that is going to continue. I don't think the culture in Kotak, pushes them to doing really silly things with lending. So I would say that is perhaps the only fear, is that they're losing market share in some of the priced part of their asset properties. Their liability book has always been consistently at a low cost, so they've not had to do anything major this quarter or in the last few months to shore up deposits in any major way. So I think given that, I don't see that their growth is meaningfully going to slow down. It may look less relative to the others because the others have picked up, such as ICICI, but then HDFC has slowed down. So in a way, some of that is kind of balanced out. But I think still there is a lot of growth ahead if Kotak continues to show. Of course, there is uncertainties of what happens, but I don't think from an institutional perspective where it is today that they should show less growth from a profit perspective and probably maintain the NIMs that they have. They should continue to maintain decent ROEs going forward. They've been priced for those higher ROEs, and I think that price will come down once earnings comes, because if your denominator grows, then your multiple comes down by nature.
Fair point. Fair point. Yeah, actually, unsecured loans and loan growth itself is picking up. I mean, 18.5 is no laughable number. Okay, now coming to ICICI, do you think it is worth paying more for ICICI now, considering that they're showing steaming growth?
Yeah, Latha, to be honest, we own ICICI. We've owned it for a while. So, I mean, even I was surprised by the strength of these results that came in over the weekend. I would have expected a little more moderation, but I think they've grown on all quarters. SME, business banking, showing very strong growth, which we wanted actually because we wanted less focus on retail, but honestly, even the retail loans have grown quite considerably. So I think the book wise, not much concern. NIMs are flat. They are,
Oh,
they're not
NIMs are
falling in any
down.
meaningful way. I think the cost of capital has gone up a little bit compared to, but they're less than 5%. So, being a large bank, that gives them an advantage. Um, they've not had many surprises or any meaningful surprises. NPAs are low, so the growth overall has been fantastic. They have an ROE at I think 310 rupee book value. They're earning annualized rates of 56 to 58 rupees of EPS. ROEs are upwards of 16, 17%, which is great for a bank. If Also with provisioning ratios at 82%, you're not seeing any potential negatives that could
No,
hurt them right now. But of
Deepak,
course, you're also
you don't see negative. I agree, but do you think for finance companies and banks in general, the leadership cannot come anymore simply because NIMs will continue probably to be under pressure, and it looks like even in this quarter there will be treasury losses Q3 going by the way. I mean, probably those gains will be written back next year. But and an unsecured loan, they're already growing really fast. Unsecured book is the highest in 24 quarters, Abhishek tells me, for ICICI. Therefore, do you think, banks have pushed all levers possible, and now things will start to look less shining than in the past, say, 8-10 quarters?
I think, Lana, that's a problem in the entire banking sector. We've seen some really
Exactly.
scorching growth. Credit card outstandings are 2,17,000 crores right now. So that's 2x of what it was 2 years ago, or 2.5 years ago, really. So it's been scorching growth across all personal loan categories. Other than housing loans, I think housing loans are slowing
Okay.
down a little bit, but we're seeing fairly large growth in other personal loans, unsecured personal loans as well in the industry. So I think overall we're seeing extremely high growth, and where we're seeing ICICI is roughly in par with that. There is, of course, the
Okay.
fear that and RBI has expressed this as well, that unsecured personal will probably have to be provisioned at a higher rate at some point, because I think we're going to see some defaults. We've seen some banks talk about it. I think ICICI has room for that in terms of provisioning. So I don't think that's so much of a problem. But yeah, the next few quarters, you might see some treasury losses. You might see some NIM contraction a little bit. We haven't seen much of that because the rate at which advances have grown and the realizations have grown on the asset side seem to be matching, at least for ICICI, on the
Okay.
change in the liability side. So
Okay.
NIMs haven't contracted for it.
What's your
Large banks.
pecking order, Deepak, in terms of banks now?
I'll give you that. Yes, I think my and this is my bias because we own ICICI and Kotak, so I'll keep them both on top. But I think HDFC would be an interesting opportunity because I still like large banks from a long-term perspective. I'd probably place that, and I'll wait for my views on Axis and a few others. But I think I'd still play HDFC after these, because you're talking about the higher
Okay.
growth. And then you're talking about potential opportunity in HDFC, which is more like the currently the ugly duckling in the pack, because it has so much, it has a 2-year headway, I think, before it starts getting back. So I'd place those first, and then the mid-cap banks I would place further down the order, because they are going to be affected more by a relatively high interest rate cycle and a potential NPA cycle than the larger banks.
Okay, okay. Well, I don't have enough time now to discuss the NBFCs because Poonawalla Fincorp results were good. L&T Finance was very good. Now, all these are going to face some threat from Jio. So what would your pecking order be among the NBFCs? Would you really fear the rise of Jio?
So I think I own Jio because we had Reliance, so we have shares of JioFin. But I think it's going to take at least 2 years for them to build enough of a book to be a threat to even the L&T Fin or the some of the smaller banks or the larger NBFCs. I think they have a great book. They don't have to raise a lot of capital because they have this book that allows them to grow without having to raise too much capital. But they really need to be lending, and I don't think they've started yet in any meaningful way. It takes a long time to build a credit culture. It takes a long time to build a book that is reasonable, to build the risk practices, to they have the ability to raise capital on the debt side of the when they need to. So I don't think that is so much a problem, but I think they will face challenges in trying to break into the markets. They'll take 2 years to get there. So we are
Okay.
holding on for the longer term. I don't expect any surprises in the short term. So it's a small part of our portfolio. Next 2 years, you should wait for them to grow. The smaller NBFCs, the problem isn't the geo finance. It is indiscriminate lending. If it has happened, it will show
Yes.
up in the NPAs. We're seeing some banks talk about it right now, increasing provisions. We're seeing some NBFCs talk about it in terms of slowing growth, and when vintage slows, when growth slows, the old
Okay.
vintage loans start appearing
Sure.
higher
Sure.
on the NPA list in terms of
Oh,
percentages. So you're going
okay.
to have that as a factor. I think that is
Fair
their
point.
problem bigger than Geo today. But Geo could be a
Fair
factor in
point.
2024 and 2025. But let's see how that evolves. I don't want to call it too
Fair
early.
point. Fair point, Deepak. Thank you very much for giving some perspective to how we should be approaching both NBFCs and banks. There's so much to chew on. Thank you very much for joining us on this festive occasion. As we wind down on Bazaar, the mid-cap index is clearly showing much more pain. Markets at their lowest point of the morning. Wrap up on Bazaar. Chartbusters coming up.